Today we're going to talk about whether the US election is going to be a key turning point for global investing. And the short answer is yes, definitely. The challenge, however, is that we are only one day into the new Trump era. It's difficult to say exactly what will happen next year when Trump takes office. And we're just scratching the surface here, but it's a worthy effort to try to update you on the markets and on our thinking, strategy, and core recommendations. We're very fortunate to have Paul Devierno, our US strategist, also with us today to talk about the post-election world. Paul, you there?
Yep.
Hi, thanks for joining. Okay, overnight, the US went pretty crazy with the Trump win, with S&P up 2.5% and up 24% year to date, beating almost every Wall Street target at the beginning of the year. Small cap, as we expected, outperformed. I'll talk about the fundamental reasons why later, was up 6%. But if you look at the year-to-date performance, it still lagged S&P 500. And I was reminded by Paul this morning that the valuation for U.S. small cap is still much lower than S&P 500, which is the large cap. The Treasury yield went up, and actually went straight up in the last 1 month or so. The momentum is likely to continue, and gold went down 3% with the stronger dollar, and Bitcoin also went up. Sector-wise, again, this is just only 1 day of performance. Let's not read too much into it, but we do see a revival of financials, industrials, and energy because of Trump's pro-growth and pro-business policy. It's not hard to understand why these sectors outperformed. Not only yesterday, some of them, like financials, also did very well year to date, likely due to, like I said, Trump's pro-business agenda, the relaxed regulation, which may benefit Wall Street, investment banks, etc. Our all ETF portfolio, this was updated to November 5th, not yesterday. What we try to do is consistent with our house view of adding more US small caps. So we will be adding to our 2.5% position in IJR, which is the S&P small cap ETF, in response to the Trump election win. And in turn, also increasing our total US equity exposure to almost 30%. No other changes. And year to date, our main return contributor remain US equity, gold, which continue to do very well, and China, which also we overweighted against the market with a 7% exposure and started to outperform somewhere around the second half of this year. Our core recommendation for US stocks also remain no change as of yesterday because the crazy US market, we're up 34%. You've probably seen this before. We can go through some of the names if you like during Q&A. S&P 500, like I said, up about 25%. China stocks, we lag a little bit versus the MSCI index, up about 15%. Our main lagging performance came from the Macau gaming plays, which still are down year to date, despite the strong fundamentals. Galaxy just reported strong third quarter results. And we also have lagging performance in something like PetroChina. Okay, what we predicted before the election was this. The most likely scenario is a Trump win, plus Republicans control both the House and the Senate, which we call a red sweep. We are still waiting for the House results. The Republican already won the Senate, but look like the red sweep is the most likely, still the very likely scenario. And we said about a week ago that this will be positive for the stocks and negative for US treasuries. The challenge for the US market right now is that we had very strong performance year to date in S&P 500, in Magnificent Seven, and people wonder whether that's priced in. It's a real concern, especially thinking about the valuation of S&P 500 as well, not cheap. So what else to buy when you want to trade the Trump becoming president again? So we also talked about this before. Let me just reiterate some of the key calls, like as the small caps, which has higher beta, higher leverage. When I say higher leverage, that's both the financial leverage and operating leverage, meaning that if the economy does well, they will do even better. So they will also benefit not only from Trump's pro-business agenda, but also the Fed cuts, which is expected to announce another 25 basis cuts tomorrow, perhaps. So that has been our top pick in terms of the ETF. So if you think S&P 500 is overvalued, overrun, one laggard that you should consider is small caps. And yesterday proved my point. There are two ETFs you can trade. Either one is fine, which is the S&P 600 small cap or the Russell 2000. Yesterday, you also saw the energy companies in the US did very well. Occidental is our core recommendation since December last year, is also Warren Buffett's favorite stock. If you don't want to pick stocks, you can buy another ETF called the Energy Select ETF, which include all the top US and some global oil names. And then lastly, on the reduced regulation, which regardless of whether the Republicans win the Senate or the House altogether, I think Trump will push through for relaxed regulation for big tech, big oil, or big pharma. I think the company that we should pay most attention to is Google, because that's the company facing the most antitrust risk right now, because it's facing a possible breakup and already a legal proceeding by the US against Google. So let's see if Trump becomes president, we'll make some changes around the FTC, the Department of Justice, and how these companies will be treated. And the usual Magnificent Seven of them, NVIDIA, also are under antitrust investigation, by the way. Microsoft, yes, and Occidental, I mentioned earlier, is also one of the companies that under antitrust proceedings. So all these are interesting, except for Tesla, which probably the only Magnificent Seven company not under antitrust, because auto industry is very competitive. We said that the Trump win is negative for US treasuries, and indeed it's happening. The question again is, because the yield has gone up so much, right? And the volatility in the treasury yield is also very high these days. Are things already priced in? On the downside, in terms of the bond price, and upside in terms of the yield, that's the risk, is that the yields can overshoot. So Paul and I have an in-depth discussion on this already, and we both believe that whether the US stock market or bond market today is a lot of momentum behind it. So we can't really control that and predict that. It's very possible the yield can continue to overshoot. Now has easily broken the 4%, 10-year yield well above 4%. So the momentum is very strong. That's why we're cautious. But if you look at longer term, the yields, here I show you the 7-year US corporate yield for IG, for investment grade, high investment grade, it is still well above the break-even inflation. So if you look at that, from that standpoint, the yields are still very attractive. So our suggestion is nothing wrong with locking the yields with buying bonds today. That trade is still on because if you look at this chart, that bond yields still beat inflation. In fact, with the yield going up and inflation coming down, the spread is even wider. So even more rationale to buy bonds, but we just need to be a little bit cautious of this momentum, the momentum of the yield going up. So please take your time to buy bonds because, like I said, the bond yield may very well continue to rise. And this chart, again, confirmed that there's a positive correlation between the Trump win and the bond yields prior to yesterday's results. Bitcoin, it's not something we know a lot about, but with Trump win, we will look further into it. It's not a traditional asset class, but I foresee ourselves to research and talk and share with you more on the Bitcoins in the coming year as Trump takes office. And the incremental information or the change this year is Trump said on record that he wanted to make Bitcoin a reserve currency. And maybe not just for the US, the way that the world's evolving looks like Bitcoin may become a reserve currency for the world, for the developed world, including Europe and US and Japan, etc. So that could be a long-term direction. Right now, if you look at the composition of the global reserve currency, the majority of that is still US dollars, followed by gold and euros, each at 18%. And Bitcoin is increasingly being compared to gold, or some people call it digital gold. So back of envelope calculation, if Bitcoin becomes 10% of the global reserve currency in an unlikely situation, that will be about 1.2 or 1.3 trillion market cap, which is about the Bitcoin price right now. So the two key points here is, number one, Bitcoin is already pricing the fact that it may become a reserve currency at a 10%. Further upside will depend on whether it can become like another gold, which is at 18%. I think it's very unlikely. And don't forget also, Trump's pro-energy policy, Elon Musk's pro-nuclear energy policy will reduce the mining cost of Bitcoin for sure. So with all these changes, my tentative thought is that Bitcoin will see increasing adoption because of Trump becoming president. But the price may not go up further because already pricing pretty optimistic scenarios, plus the mining cost of Bitcoin will come down as the new energy policy US rolls out. Commodities, we said earlier that it's positive for energy companies, but may not be positive for oil price because Trump also said on record he's going to end the Russia-Ukraine conflict and possibly ease the Middle East, the Israel-Palestinian situation. So our recommendation, our view is that price of oil may face some downward pressure with Trump taking office. That's why we recommend invest in oil companies, not the oil price directly, because especially U.S. oil company, they're not subject to OPEC restrictions. They can increase their production of oil and natural gas to make up for the declining commodity prices. So oil companies, not oil price. And lastly, on gold, it also, like I said, this is only the first day since the new era. We see a lot of mixed impact on gold. For example, if Trump does end the Russia-Ukraine war, we could have a more peaceful world, if you believe in it, and the lower demand for so-called the safe haven assets. That's not good for gold price. But you know how Trump it is. He's going to probably create more inflation uncertainty with the trade war with China, maybe a global tariffs of some kind, which Paul will talk about. And that would mean a lot of uncertainty surrounding US dollar and the interest rate. And that will be higher demand for gold as a hedge against the central bank's failure. We are already seeing that this year, people buying gold, not because of geopolitical risk, because their loss of confidence in central banks everywhere, not just the US. And then lastly, we have the increasing demand from Russia and China as they want to decouple from the US dollar system. That's positive for the gold price, even though we are seeing some slowdown in China's purchase of gold recently. But year to date, China still bought a lot of gold. And Paul also said to me, which I very good observation, that despite even gold down, it was down 3%, gold is still at a historical high. And with the US dollar strength and the yield going up so quickly, so dramatically, gold is still held up. And that's show you that relative strength in gold. And we still like gold long term because of the central bank issues, because the Russia-China buying I mentioned earlier. And I said yesterday, not because China market is up today, it just because, I mean, this is prior to today's market performance. I said this is not necessarily bad for China, a Trump win. People worry about, we'll go back to the 2018 trade war here. I shared a news headline just to remind people what was it like back then, exactly about, what was this, 6 years ago when Trump was president, almost every 2-3 months, he came up with this tariffs on all goods from China. And it caused a lot of panic in the market. It caused a lot of pain to the Chinese economy. And made people worry we're going back to that time. But my view is that this will probably force China to issue a bigger stimulus. Again, I think if you look at today's Hong Kong market trading was down at the beginning, intraday went up a lot, a few hundred points, probably because people are banking on China will do a larger stimulus, and the media speculated something like 10 trillion RMB over 3 years. And don't forget, tomorrow the Fed will probably or likely announce another 25 basis cuts to the federal fund rate. That will also allow China to relax the monetary policy. And lastly, as I said before, the macro data, especially the real estate market, is showing signs of improvement. So my view on the Hang Seng Index, I used to have 3 possible scenarios, but that model is becoming obsolete because we are already 60 trading days into the current rally. Simply speaking, we're now in uncharted territory. I don't know how technically things will pan out, but fundamentally, I do see macro data being the most important, no longer the policy. The policy will support Hang Seng above 20,000, maybe 19,000. I'm not too sure. But in order for us to move up beyond 22,000, will require the macro data to improve significantly. And let's watch, starting this weekend, China's macro data, including the CPI and PPI. Next week, we have more data such as exports and fixed asset investments. So that will be very important to the Hong Kong China markets. 22,000 is a key barrier. For us to break it, we need the macro data to get better. In the worst case, I don't think we're going beyond 17,600 on the downside. I shared this with you before. If the macro data does not improve, we may go beyond 20,000 or may go down to 19,000, but 17,600 seems the hard bottom. No change to our core recommendation. And just to show you, we already structured our portfolio, our recommendation, including trading buys to avoid the Trump risk. So if you look at any of these names, they have very little or almost no Trump risk to it, because it's all about, or mostly about, domestic consumption, domestic China. I try to stay away as much as possible from exports. Exports not only will face more trade tariffs from Trump next year, also face a higher comparison versus this year. Lastly, remind everyone, we do have social media accounts active. I am on LinkedIn under QWANG and also on Twitter, X at Wang CFA. Paul will do another webinar. He does a very successful monthly webinar on U.S. markets. Please pay attention. He also helped us. There's some very professional YouTube updates during the U.S. election. His next monthly webinar will be on November the 14th. We'll have a guest speaker, and here's a registration link. I will stop here and take any questions. If you have any questions, please use the window to the text window to ask the question. Can you? Sorry, I screwed up. Okay. So while we wait for a question, Paul, Tesla was up, what, 13% yesterday. Any view on that? Do you think Trump being elected?
Well, going into the election, obviously people were saying, oh, if Kamala Harris wins, because Elon Musk wound up becoming such a big supporter of Trump, that the knives would be out to get him, and that would be bad for Tesla. So the way you should view the rebound in Tesla yesterday is not because the U.S. government under Trump is going to do anything positive for Tesla, but now we've erased the risk of some sort of vendetta against Elon Musk. And it is really very fascinating if you look at the core of the Democratic Party, which is, white, college-educated, suburban women. If you had brought up Elon Musk to them 3 years ago or 4, before he bought X, you would have gotten a very positive result, and they were all very, it was very chic to own a Tesla. The very same group of women, if you bring up Elon Musk today, he's the devil. So he has damaged himself with a key market group in the United States for Tesla doing this thing. But at least he's skirted the problem of having a hostile government. And for Elon Musk, I should say, you can't invest in it, but the part of his business that will benefit is SpaceX. So SpaceX is going to boom under Trump.
And SpaceX has a government contracts, right? A big part of the business is a government contract. So I do see that. So what Paul is saying, though, will definitely remove some of the downside risks for Tesla. Not only for Tesla, I mean, the antitrust issues apply to, the legal issues apply to a lot of other companies as well, in the M7. However, I do have one worry about the time allocation. It came up from time to time, when Elon Musk was running 5 companies at one time. Now he's becoming part of the cabinet for Trump. I think I worry that investors may come to realization one day or one time that at some point that this may be an issue, whether he has enough time and energy to run Tesla and deliver shareholder value. Okay, we'll see. So before Paul, let's take up some questions from the audience first, and Paul and I will have plenty of other things to discuss. Meta share price suffered. It is the threat from Trump justifying the weakness? No, I don't think so. I think the founder Zuckerberg's already publicly stated he's not going to be involved in politics. He admitted wrongdoing when he was involved when his companies are all involved in the previous social media platforms were involved in the previous election cycle. I think that era is over. I don't think Trump will be necessarily negative for Meta. In fact, the TikTok ban will be positive for Meta's real business. Meta has a very successful real short video business that's delivering strong advertising growth, delivering strong user growth because of the TikTok ban. And I think Trump will continue to support that. The next question on opinion of the 20-year Treasury yield, TLT, long-term view. Paul, anything?
Well, the TLT is really for speculation that you think rates are going to drop. So our view is that rates are pretty much around fair value right here. So do you really want to speculate from fair value expecting them kind of to go lower? So the answer to that is no. So, but if you look at the chart of that 10-year, and you're just speculating basis the chart of the yield, and you feel that you know something, go ahead and do it. My bias would be to wait for it to go up a little bit higher before you put on that speculative position that yields are going to drop.
It's kind of,
but if you're just, because none of us have insurance company as client. Well, maybe someone does, but I don't think any of us have insurance companies as clients who really want to own 20 and 30-year bonds as part of their portfolio.
So yes, just back to what we said earlier, we are a little bit concerned about the upward momentum in the yields. So far, the Treasury market the yields is probably the most volatile we've seen in recent years. So you could punt the TLT, but the timing risk is critical. So our suggestion is try to get the yields as high as possible when you buy TLT. Trump being elected, what is the stance on China and Hong Kong stocks, and will there be a possibility of further trade tariffs in commodities, agriculture, etc.? And what holds for China as is an unfavorable position? Should we steer of China, Hong Kong markets? No rush to finish up. Okay, so it's a multiple questions here. I think if I were to summarize is really what's the implication on China relations to the Trump trade policy. Paul, I'm going to start to talk about first, and maybe I'll turn to you about that thing you told me this morning. Is that okay?
Yeah.
Okay. So what Paul and I think is that Trump is going back to a traditional trade warfare. Let me put up this slide for you guys. So in Trump's case, he's like an all-around guy. Whenever he announces 25% of tariffs, he does it for all China goods. He's indiscriminate, and that's a traditional trade war. It's both good and bad. It's not as precision targeted as in Biden's case, but it will have overall negative impact on the Chinese economy because it impacts almost all goods from China. So that's why I explained earlier that in China, there's one area where particularly cautious is the exports because they may very well started something like in 2018, again, a traditional trade war. However, on China markets, I think China will, in retaliation, not only do some trade tactics with the U.S., but also to stimulate its own economy, try to offset the negative impact on exports. And one area that China can do is really to stimulate the consumption to offset the weakness in exports from the Trump policy. So that's, again, if you look at our recommendations for China, it's almost all consumption and almost no exports, maybe with the exception of higher, they have a sizable European and US business. So that's our strategy, that's our recommendation. Trade war, it is a big deal, but maybe it's not, because depending on how China rolls out and uses the stimulus, I think can mitigate some of the risks. And then, Paul, what was the thing you mentioned this morning about like a global tariff? So let's also talk about that in the context, what they're doing with not just China.
Yeah, I mean, let's just talk about the change in Trump's mindset, or maybe not a change in his mindset. When he got elected last time, he was basically saying that the U.S. is getting cheated by stupid trade deals. They're getting cheated by China. So he came in, he was got to put tariffs, and he was got to fix those stupid trade deals. And he did do new trade deals with NAFTA. He did new trade deal with Korea, new trade deals with Japan. And he actually got that trade deal done with China, but then the whole thing got scuppered by COVID, right?
Yep.
Right. But this time he's talking about paying the U.S. budget using tariffs. So basically tariffs is, for a totally different reason than what he had said previously. So we don't know. But firstly, you have to understand is the president does not have the power to put across the board tariffs on everyone. That would have to be approved by Congress. And Congress, he has a lot of sway with Congress. He might be able to get them to do it, but they're got to stick all kinds of exceptions and all kinds of things. It'll be like Swiss cheese. So this is what you kind of expect going forward. However, within Congress, a dream of the Republicans have been to, and this was when Trump got elected 8 years ago with Paul Ryan, was rather than do tariffs, to have a border adjustment tax. So I think you're going to see with the Republicans.
Can I stop you for a second? So again, you always mentioned a very interesting word. This is also the first time I heard about it in the last few days. What is it again? Border?
It's called a border adjustment tax.
Okay, this is something that everyone here need to pay attention, because we expect to hear more and more about this border adjustment tax. CNN, CNBC, Bloomberg, they're all going to talk about it as Trump gets elected. And let's hear Paul's thoughts on this.
Right. So you have to understand where this is coming from. This is coming from part of the traditional Republicans in Congress. So Paul Ryan, who's no longer there, this is one of the things he really loved, right? Mitt Romney would have loved this, okay? So basically, if I start to explain it, it's just got to get it'll get confusing. So basically, just to view it this way, you're putting taxes on everything that comes into the country, and you're not taxing anything that American companies export. So it does both. It both taxes. It acts like a tariff on the way in, and it acts like a tax subsidy on the way out.
And that's indiscriminate, right? Not just China, everybody.
It would be on everything.
Yes. Okay. So that's what we call a global. So you can simply take this as a global tariff, even on stuff imported from Europe, not just China. Of course, China will have the special love of additional tariffs, but there may be, like Paul said, a global tariff. And we are still trying to scratch our head and see what that means investment-wise. Paul, any initial thoughts
right.
for the U.S. economy?
Well, the initial thing is if you start hearing about this, because like I said, if you think this is, and you start saying this is starting to gather momentum, it is hugely positive for U.S. exporters. So Boeing, right out of the blocks, it would be positive for Boeing. ADM, Archer Daniels Midland, Bunge, very positive for anybody who's a big exporter. That's what those would be the big beneficiaries of a border adjustment tax.
And possibly positive for the U.S. economy, but it may. Do you think that will lead to higher inflation?
No, I mean,
not necessarily.
I mean the effort would be to make it kind of revenue neutral. Just basically you're replacing the income tax, the U.S. income tax as it is today, with this border adjustment tax.
Got it. Let's move on. There are a few more other questions. So just to wrap up earlier question, on the trade front, we can expect a lot of new changes next year, including the border adjustment tax and China tariffs, not just the China tariffs. On China, we already said that we should still invest in China, but stay away from exports. In terms of the U.S. economy, the border tax could be positive for the U.S. economy, especially the U.S. exporters. And Paul already gave us some really good ideas on that. And then let's watch it. Next question on Trump, Taiwan, and Europe has to spend more on defense. Defense stocks in these places. We actually do not comment defense stocks for morality reasons. So let me not answer that question. Trading Bitcoin at UOB, we can trade Bitcoin ETFs on UOB's Hian's platform. If you have any further question, please contact Matthew Wang's team, our product team. And market talk is Elon Musk will be in a presidential team. How do you see the positive effects of this company? Yeah, we already talked about this. About Tesla, we said that this will at least eliminate the downside risk for Tesla in terms of upside. We're not sure how, and there's additional concern about the key man risk or the allocation of time and energy between Elon Musk's public duties versus private mandates to manage not just Tesla, but a few other companies. So I think investors are not thinking right now, but doesn't mean they will not look into this later. So that's always a risk for Tesla.
Yeah.
Any views on firearms? No, we cannot comment on firearms. Go ahead.
Yeah. If you wanted to get the positive thing, would be with Trump in charge, Elon Musk will be less worried about freedom of expression being impinged in the United States. And there's always the chance that then he would sell X. So if he got out, meaning Twitter. So if he sold Twitter, that would be considered a big positive for Tesla because it removes a gigantic distraction for him.
Distraction. And Tesla, and he probably make a lot of money in Tesla too, right? The valuation's gone up.
X?
Yeah.
I'm not so sure, but maybe, who knows?
No,
The guy's a very lucky guy.
Well, but basic, well above what you paid.
Right. But my expectation is that very soon SpaceX will be worth more than Tesla.
Of course. Okay. Firearm, we cannot comment. And gold. Long term, we still like gold. Like I said, the rationale behind gold, even if Trump can resolve this geopolitical risk, I don't think he can single-handedly do it because it's not up to him alone to do it. He will probably ease some of the tension in the Middle East and end the Ukraine war, but doesn't mean the world will be all smooth sailing from here. So gold is still an important asset to hedge against geopolitical risk. The other thing is, I don't think Trump is going to change the fact that global central banks facing this uncertainty, inflation, including the Fed, there's still controversy whether the inflation is under control or not. So gold will be a good asset class to own if you believe in uncertainty in geopolitics as well as inflation and interest rates. China export company, we already talked about to stay away from all exports. Let me be clear, to all exports, export-oriented companies from China. In EV space, we are seeing increasing competition and washouts. Of course, BYD may very well come out as a winner, but before we have a industry restructuring, I think it is still full of competition risks. And then solar, et cetera, these will continue to face tariffs from the U.S. And by the way, the U.S. is also trying to, I think with the Trump and the Elon Musk era, I think the U.S. could very well develop more into nuclear energy as a clean form of energy versus solar. With a possible clean sweep, will Trump have any check and balances in pushing his agenda? Paul, anything thinking on that?
There's the structure of the United States is designed for the president to be weak. So I would not worry about
the trade tariffs, right? He doesn't have
right. So if everybody in the Republican Party is very thankful for Trump to leading them to victory, right? If it weren't for him, they would not be popular. He outperformed them everywhere. Meaning, if you're running for Senate in some state in the United States, you maybe beat your Democratic challenger by 2 or 3%, but Trump was beating Kamala Harris by 10%. They like him more than you. So if he asks for tariffs, you're going to say, yes, sir, we're going to give you tariffs. But then they're going to stick so many, every single senator and congressman is going to have some businessman saying, I'm buying this part from China. Or I'm buying this part from Germany. I need an exception to the tariff for this part. Otherwise, my factory's going to be in trouble. And they're going to stick those exceptions right in. And you figure, multiply all those senators, all those congressmen, the big, broad tariff just becomes a gigantic piece of Swiss cheese.
Yeah, let's stop here.
And that's how U.S. Congress works.
Got it. So next is on another question on Tesla, gone up yesterday because of Trump likely impending tariffs on EV. I think this question implies that with Elon Musk possibly in the office, the Trump administration may cut the tariffs on EVs. The issue is Tesla does not export EVs to the U.S. Okay, so I don't think it's a reason here. So I don't. No. I think they're saying it. The U.S. because I think that's incorrect. I think the person saying that the U.S. becomes a more protected market. More protected market.
Right. So that's good for Tesla because it pretty much would only have to compete with GM for EVs. But I think that whether it was the Democrats or the Republicans, there was definitely going to get definitely the barriers were going up against imported EVs. So I don't think the election result changes that at all. So actually what you started to say there, Chi, is more correct. That fact that Elon Musk is going to get significant airtime with Donald Trump now means that whatever the U.S. tariff or policies towards EVs is going to be a little bit more nuanced and presumably favorable to Tesla.
Yeah. Any update on the Trump? Well, will Trump be impeached with the next question? You see it, right? The impeachment possibility of Trump. Now he's already convicted of 2 or 3 felony charges.
No. Well, no, you need a majority in the House of Representatives to vote for impeachment. To impeach him, and since the Republicans are going to control the House, there's zero chance. And everybody, I think, will now start to realize how counterproductive is. To the Republicans' credit, they really avoided impeaching Biden, so good for them. And so hopefully, even if the Democrats regain the House, they will not try to impeach Trump. And actually, since he'll be finishing his by the time they get a next set of elections, he'll be in the end of his career. The last thing they want to do is push him out and make J.D. Vance president of the United States.
Yeah. Okay, Paul, let's be a bit short. A lot of questions and let's try to be quick with the answer. 60% tariff on China, 10% globally. So is that possible? Is it just a campaign promise? On China, that 60% may not be incremental, it's just totals on top of whatever is already imposed on China. It may not be that much because China is already facing heavy tariffs on U.S. exports, things exported to the U.S. The 10% global is what Paul just mentioned about the border tax, right? What is the cross-border?
Border adjustment.
Border adjustment tax. So that could be the same thing. And Paul, the question is, what is a quick answer to what do you think about the Israeli-Palestinian situation with the Trump in president-elect?
With Trump, it's very hard to know, but what he has said, what has been reported is he told Netanyahu, I don't care what you do, but I want it over with by the time I take office in January. I don't want to have to deal with this. Okay. So what that means, how Netanyahu will react to that, we don't know. But basically, Trump doesn't want to deal with this thing. And he's not going to roll over to Netanyahu the way Biden did. So Netanyahu better do what he's going to do now and get it over with.
Yeah. There are a bunch of geopolitical and political questions. Let me skip through some more investment-related questions, if that's okay, and we come back to the geopolitics side. What's our view on the U.S.? What's our view on the U.S. dollar? Will the U.S. dollar stabilize or go up with the Trump in office? I think we looked at this yesterday, Paul, right? I think Trump's policy is a bit conflicting sometimes. I mean, some of his policy inflationary, some of his deflationary. So we're not really sure that he will do what he meant. And if you look at the track record during his previous in office was 2016 or 17 to 2020, that the U.S. dollar was actually range bound. So it didn't really go up or go down much. Any more thoughts on that?
Yeah, I think the thing that you should notice that with, let's not even just talk about the election, but since the 10-year yield started going up in September so much that the yield advantage of the U.S. over the euro has blown way back to where it was before when the dollar was very strong. So that's why, the dollar looks, to answer your question, the dollar, that's going to keep the dollar stable at the very least.
Yeah.
And you can just take a look at the chart. Just take a look at the 10-year U.S. Treasury versus the 10-year Bund, and you'll see what I'm talking about.
Sure. Let's also talk about the Fed. I see a couple of questions related to the U.S. economy, inflation, and the Fed. What do you feel? What do you think the Fed is going to say tomorrow? How that will impact the market in the context of the Trump era?
I think people who signed in early, we were talking about that. I think the biggest right now, what's priced into the market is a cut tonight, another cut in December, and interestingly, only 2 more cuts next year. So the most likely next year. So 4 cuts between now and the end of next year. That's all that's priced in. So I think given that that's pretty conservative is sort of priced in. Of course, if they confirm that, that's bearish and bad and bullish the dollar, et cetera. But I think there's more risk the other side where they'll be a little less hawkish on the call and kind of reaffirm what they kind of were indicating last month. So I think we might, if you're saying, what do I expect to the Fed, at least for tonight, I'm kind of expecting them to say some things that are going to be pretty positive.
Yeah. And we've been saying earlier that, the Fed rate cut definitely positive for China, give the PBOC more room in terms of relax the monetary policy. We also give you the ideas of the small cap ETF as a better beneficiary of the rate cut versus S&P 500 because of small cap tend to have higher debt levels and higher leverage with the economy. So on the U.S. economy, there's a question about the U.S. economy started slowing and a possible slowdown, and the Trump's promise to increase tariffs. We talk about this later and possibly lead to higher inflation. What's the risk of stagflation? I don't think U.S. is heading to stagflation. Paul, you're thinking?
Well, not of the short term, but the higher tariffs obviously create higher prices. That is inflation. But the monetary policy won't react to that because the Fed won't react because the inflation is not being caused by monetary policy. And basically just to do, if you ask an economist, just do large across the board tariffs is bad for your economy. So if anything, if Trump does broad across the thing, that slows down the U.S. economy. It's bad for the U.S. economy, bad for U.S. stocks. It makes interest rates go slower. But the market, you can see how it's reacting. It's expecting that the actual trade policy of Trump will be more nuanced than that.
There are a couple of questions on the stocks that we don't cover or we have no knowledge or we cannot comment on. So someone asked about the DJT, and I don't think it was appropriate to comment. Any trading idea in Singapore, we have not studied that in a context of the U.S. election yet, including things like REITs. It's not our core recommendation, not our focus, but we could follow up on those questions. There's some simple yes or no questions, Paul, maybe on the U.S. politics. One is that do you think that Trump will do away with the Inflation Reduction Act? I don't think so. What's your thought?
That there's a lot of fat in that act, so there's plenty of things that they can go after there, right? Yeah. So you expect a lot of changes to that.
Okay. Can you name some specific ones? Reduce the government spending, right?
I think, well, you could see the reaction of the wind and solar companies in the U.S. So the subsidy, a lot of the subsidies and stuff, those are going to be gone.
That's right. The question about how long the current upward movement in stock, the U.S. stocks will last, and the 10-year yields being so high. We talked earlier that both Paul and I think the 10-year yield would still have some tailwind behind it and will likely keep the strong momentum. And it's hard to say how much further the yield will go up. But I think the more it go up, there's probably more rationale to buy bonds because to lock in the yields against inflation. That's a point we made very clear earlier. On the U.S. stocks, our stance has not changed. We since the beginning of the year, since this first quarter this year, we're cautiously optimistic on the U.S. stocks. In hindsight, we may be too cautious. And about 2 months ago, we are turning more positive, less cautious, and our stance remained the same. The key is not just on the direction of the U.S. market. We just said earlier that S&P 500 may very well be priced in the Trump win. So what else do you need to buy? I clearly laid out some ideas on. So it's really about the small caps. You play certain sectors and certain stocks, and not having to worry too much about the direction because I think, it may not be a straight up market anymore. It may be range bound in terms of large caps and M7s because they've all gone up a lot year to date. Going forward, stop picking the sector strategy, small cap versus large cap. All these are quite interesting ideas. Paul, any thoughts on that?
No, I basically agree with that. I just wanted to add that Trump is more market conscious than any other president in the history of the United States.
Yeah, that's right.
So if any of his policies screw up the market, he'll say, well, that's not really my policy, and he'll change it. Right. So one of the things about it is that, he is not gonna pursue aggressively any policy that is making the stock market drop.
Yeah. Okay, we got 5 minutes left. I think one topic we haven't touched too much about is what are the risks to the market now Vance is elected? Paul, any thoughts? We talk a lot about good things, including Tesla. It may be potentially positive, and the energy industry, small caps. Any bad things could happen. Paul?
No, I think everything looks pretty good with but Trump could find himself a victim of the economic cycle, right? The U.S. has been in an expansion mode for quite some time. No fault of his own. You could just see an economic downturn.
Not because of Trump, simply because of the numbers, right? Cycle.
Yeah. Right.
But we haven't
just because of the cycle.
Recession. We were on in the U.S. recession. People calling a recession this year. It didn't happen. And what about next year?
Well, people aren't calling for a recession next year. So maybe, if you go with the track record of prediction, maybe you should worry about it. But just to answer the question, what is the risk? And the risk is, of course, a downturn. And the U.S., because it's been running such big budget deficits, it's in no position to stimulate the market if there is a downturn.
Yeah. I'm just look through the, also on the U.S. risk, I think maybe not a risk, but I do want to mention about the economy and the fundamentals of the U.S. Outside the context of the election. Of course, the election is very important, and the Trump era is a inflection point in terms of global markets. We do believe that, but just remember, I mean, the markets not always trade on elections and not always trade on politics. I think, including things like artificial intelligence, it is still very much about fundamentals. So I think after this, I don't know when the market will refocus on not just the election results, but also the fundamental factors in the U.S., including the economy, including the sector fundamentals, and maybe not the main topic today, but we'll update you on that in our wealth publications going forward. In fact, those things in the U.S. markets tend to be more important than just the politics alone. Any last words, Paul, on today's topics?
No, I think we pretty much covered everything. So.
Okay, great. We're almost at the hour. Apologize not being able to answer all the questions. Some of the questions were not appropriate for us to answer. We avoided, and other questions we try to get back to you, follow up by writing, perhaps. The recording of this call will be made available on our website, as well as the presentation, which is distributable. You can send to your clients externally. I want to thank everyone for joining and hope to speak to you again next time. Thanks, Paul.
Yeah.
Thank you.
Thank you.